Hello friends, good morning to all of you. And the second method under the accelerated method of depreciation is double declining balanced depreciation method. It is double declining balanced depreciation method. So it's a combination of the SLM and the WDV. It's a combination of SLM plus the WDV, right? Now in the double declining method of depreciation, a larger depreciation or larger expense of depreciation in the initial years and later on the lesser depreciation will be charged, because that's the main purpose of the accelerated method of depreciation, right? And how we do basically calculate the same? How do we basically solve the questions for it? Let's have a look at it. First of all, we are to calculate the depreciation percentage using the SLM method. Using the straight line method of depreciation, we'll be calculating the depreciation percentage. Let's say case that we are having the asset value of rupees 1 lakh, right? And useful life is given to be of 5 years. Now, what will be the depreciation percentage as per the SLM method? As per the straight line method of depreciation, what would have been the depreciation percentage? Now, as per the SLM, if you remember, the useful life would be equal to useful life is given to be 5 years. We have to calculate the depreciation percentage. So it is 100% divided by 5. That is 20%, right? Now, whatsoever you calculated, we need to double that depreciation rate. Now it will be 20% multiplied by 2, that is 40 percentage. Now that's a third point that we have done so far. Now we have to calculate the depreciation at the double rate. Like for the first year, the depreciation would be equal to what? 1 lakh multiplied by 40%. So it is 40,000 depreciation for the first year. For the second year, the depreciation to be calculated on 60,000 rupees. The remaining net book value multiplied by 40%, that is 24,000 rupees, and so on, right? So this is how the double declining balance depreciation method works, right? Now let's solve a question based upon it. Now we are having a piece of property, plant and equipment, PPE, costing rupees 2,50,000, estimated useful life of 8% and zero salvage value. We need to calculate the depreciation using the double declining method. Now the value is 2,50,000. Useful life is 8 years. It is 8 years. What will be the depreciation percentage as per the SLM? It is 100% total value divided by 8 years. That is 12.5 years. Now we have to double this value. 12.5 into 2, that is 25%. Now we will be calculating the depreciation at 25%. I'll be calculating it for 3 years. For the first year, the depreciation would be 2,50,000 multiplied by 25%. So 2,50,000 multiplied by 25%, that is 62,500. So the net book value would be equal to 2,50,000 minus 62500, that is 187,500. Now for the second year, we have to calculate the depreciation of 1,87,500 at 25%. And the reduced value would be equal to 140,625, right? And for the third year, the depreciation is to be calculated on 140,625. And again, we have to separate 25% from it. So it is 105468.75. So this is how it's going to work. Is that clear? Have you understood this particular part? Kindly do answer at the earliest. So it is very much easier. First of all, we have to calculate the depreciation percentage as per the SLM. just double that particular depreciation rate, and further you're good to go for calculating the depreciation as per the WDV method, right? Now, there could be the case related to that there is a change in the method of depreciation. Now, the management is going to review the depreciation method, and it could be the case that we want to move from the previous depreciation method to the new depreciation method. Let's say case previously the firm was using the SLM method of depreciation, and now they want to shift to the WDV method of depreciation. It could be the case. It could be the case. But that is to be disclosed. Disclosures are to be made because there are principles. First of all, it's related to principle of consistency, that consistently the method is to be used, right? So it should not be the case that we are changing the method of depreciation very much frequently, right? And also, as per the accounting standard 1 AS1, the disclosure for accounting policies are to be made. Let's say case if we are making some changes to the policies, right, we should be making changes to it, and further the quantification is to be done, and the depreciation disclosures are to be given in full, right? The disclosures should be given in full. And further, it could be the case that we are going to change the depreciation with retrospective effect or without retrospective effect. With retrospective effect means we are going to change it from the previous years, right? And without retrospective effect means no adjustment for the previous years, for the past entries, only the future depreciation shall be charged as per the new method, right? So if we are talking about without retrospective effect, means we are concerned about charging the depreciation from the current entries only, not related to the past entries. But in case we are doing the depreciation changes with retrospective effect, in that particular scenario, the amount of depreciation is charged to be adjusted from the date of purchase of the asset. Is that clear? Now let's have a look at this numerical problem. Very much important for your basics. A company purchased a machine worth rupees 5 lakh, dated 1st of April 2018. Depreciation fixed at 10% per annum on SLM method basis. The company changed the method of depreciation to WDV, dated 1st April 2019, and sold the machinery for rupees 2 lakh, dated 30th of June 2020. What will be the amount of profit or loss? Now, just try to make sure that you are to divide these type of questions into the different parts, right? Now we know we have to divide it as per the timeline. Now the asset was purchased on 1st of April 2018. That's the first case, right? And it was there with us till under the SLM till 31st of March 2019. Till this date, we were using the SLM method of depreciation. And from 1st of April 2019 onwards, we use the WDV method. And till what date we use the WDV method? Till 30th of June. But we are going to divide for the financial years, right? So for up to 31st of March 2020, we were using the WDV. And also from 1st of April 2020, we were still using the WDV method, but we sold the particular asset on 30th of June 2020. Is that clear? Right? So for the holding under the SLM, it was for 12 months. For under the WDV, previously it was for 12 months, but after 3 months, April, May, June, for 3 months we hold the asset, we held the asset, and then we sold it. And then we sold it, right? So this was done. Now solve this particular numerical. Let's solve this numerical. Okay, so we are provided with the purchase price of the asset. So the asset price is given to be 5 lakh rupees. It is given to be 5 lakh rupees, right? And we have purchased the asset for rupees 5 lakh. Further, the depreciation rate would be equal to what? It is fixed at 10%. It is fixed at 10%. Now in case of the first case, we have to go in to calculate the depreciation for the first year. That is for the first 12 months. I'm just naming it as A, B, C for the reference purposes. So for the first case, we are going to calculate the depreciation. So it is under the SLM. That is the straight line method of depreciation. So it will be 5 lakh multiplied by 10%. So the depreciation amount would be equal to 50,000. It will be equal to 50,000. And the net book value would be equal to 5 lakh minus 50,000, that is 4 lakh 50,000. This is your net book value, right? So for the second case, that is where we are following the WDV method, written down value method of depreciation, we are having the net book value of 4 lakh 50,000. There is no case related that they have given to you that they have changed the method of calculating the depreciation, right? So you are now to calculate the depreciation on 4 lakh 50,000 only, right? Because that depreciation rate is not changed. So it is to be calculated again at 10%. But now we are following WDV. Not we are not to calculate the depreciation on the original cost, but we will be calculating the depreciation on the reduced NBV, right? So it is 450,000 into 10%. So the depreciation amount is 45,000. It is 45,000. And what will be the NBV now? It will be 4,50,000 minus 45,000. That is 4,05,000. And after that, the case C, where we are still following the WDV method, right? And the depreciation is to be charged. But here, the depreciation is not to be charged for the 1 year. It is to be charged just for a quarter, because we held the asset for just 3 months. Thereafter, we held the particular asset just for 3 months and not for 12 months, right? So we will be calculating the depreciation on 4,05,000. At 10%, the depreciation is to be calculated, and it will be calculated for 3 months. So it is 3 divided by 12. It is 3 divided by 12. So what will be the depreciation? It will be 4,05,000 multiplied by 10%, and further multiplied by 3 divided by 12. So that is 10125. 10125. And what will be the NBV now? NBV will be 4,05,000 minus 10125, that is 3,94,875. This is a net book value when we sold the asset. And at what price the asset has been sold? At what price the asset has been sold? Do confirm the audio video quality at the earliest. Are you facing some issues related to it? Kindly please confirm. There might be some internet issues right now you're facing. Please do confirm the audio video quality at the earliest. Right, it's working fine now. Okay. So I was telling you that for the third case, that's the C point, we calculated the depreciation under the WDV method only. But for 3 months, we calculated the depreciation and it came out to be 10125. Then we calculated the NBV, that is 4,05,000 minus 10125, and it came out to be 394,875. Right? 394,875. And here in the question, it's clearly given that we sold the machinery for 2 lakh rupees. So the selling price minus cost price, our selling price is 2 lakh rupees, where we are having the book value as 394,875. So what will be the loss? Loss is 1,94,875. 1,94,875. This is the loss incurred to the company, right? Have you understood the numerical so far? Now, let's solve more problems based upon it. But before that, we are going to cover a topic that's related to the replacement of a fixed asset. I clearly told you about one particular point. That first of all, depreciation is what? Depreciation is a non-cash expense, right? And it is provided because we want to ascertain the true profit for the particular accounting period. We want to have a true picture of our profits, and also we want to set aside some amount so that we can be replacing the asset in the near future. That's the main purpose of the depreciation, right? So if I'm charging a depreciation of, let's say, rupees 10,000 per year, I'm to keep aside, being an owner, I'm to keep aside that particular amount, because after some time definitely I am to replace the particular asset. I am to replace the particular asset. That's the main thing related to it. And that will be all about this video. Thank you so much and see you again in the next video. If you want to get the complete course of JAIIB, the course is available in English only language also, and also the bilingual course is available. Simply just do WhatsApp JAIIB to the number 83609 44207, and I'll be sharing all the details with you. So thank you so much and see you again.